Hey everybody, how you guys doing today? Let's go. You're seeing a lot of things starting to play out here. I don't know if you guys saw Powell in the last meeting here, but he's admitting these guys are going down. He's admitting these banks are collapsing. They can't stop this real estate thing. I've been talking about it for a while. There's no stopping the size of this thing. This thing is a Titanic, and like I said, they're just sitting on an iceberg, just watching this thing slowly come in, and they're throwing as many snowballs as they can. But you're not slowing this thing down. So I just wanted to start off this video here though with where's Pickham's Jr. Man? I put a picture of him on Twitter. I can pull him up quick. Pretty sure he's up here right away. But I just want to start off this video talking about AMC. This one's not going to be as long as my normal ones here. Also, real quick. I know I never do this, but I got to do this for a buddy here. He's trying to help his. I know this dude's. I've shown this a couple times on Twitter here, but I know he's doing everything he can. Working 2 jobs. He's about to have to sell a car. Guys, I have a soft spot here for animals, so. Anybody can help donate at all. Anything would be appreciated. I don't ask for much, never ask for anything, super chats. And if I ever do ask for anything, it's for other people. But in this case, it'd be an animal. So this little puppy's trying to beat cancer here. He's 3 years old. So, he'd still have a very, very, very long life. We're almost there. I shared this a day ago, and we almost met our goal. So if we can get there, awesome. But back to this. I want to go into AMC here, though, before we get into all that later. A lot of people are asking me right now, what's going to happen after earnings here, and what's going to happen going forward, and what's going on with this play and the short squeeze play and MOAS and everything like that. And if you guys look over here at the box office, I've kind of gone over this a little bit, but I'm going to show you guys exactly how this is going to play out the rest of the year into next year, because it just gets better and better and better for AMC going forward. And this is what I've been trying to stress to people at this point. You're finally starting to get to a place where even Adam Aaron said, you don't need the box office to get to where it was pre-pandemic before you start turning profits. But the thing is from this point on, going into May, AMC will, and the theaters and just the theater industry and everything involving it, will have nothing but good news going forward. There will be no more negatives. By Q3 this year should be a massive quarter for us. I expect AMC to be very profitable in Q3. One of the things that Adam Aaron has not yet said or talked about, and I'm still waiting to hear on, because according to him last year, he expected maybe several of these distribution concerts. Now, obviously, at this point, it's a couple months in. I don't expect several of these. But I do expect 1 to 2, maybe something, maybe get a movie or 2 here. And I just really wish he would sit down and try to get Megapolis really badly. I don't think he should, go in there trying too hard to get these negotiations to get this top dollar. Who cares at this point? You've already shown as a company you can take concert films like a Taylor Swift and make them, hundreds of millions of dollars. That's a big thing. Now show the world what you could do with an actual, highly anticipated movie. Show the world you can be a distribution company. And maybe you can go ahead and bypass that altogether also in 2025. Now, if you guys look here at the box office, we jumped up to a $1,148,000,000. That was a big leap here. Now, I told you guys last month was like the worst month I've ever seen for movies, and it was going to be a slower month. We're going to have cash burn this quarter. And a lot of people, I'm telling you, I know a lot of people are going to be like, why would we do it now? Why wait? The way that you can get through this successfully when all these stories start coming through, the way you can start to get your price to rise is to when all this stuff starts to go smoothly for your company, have a ton of cash, because we are going to burn this quarter. And one of the things I wanted us to do was raise about 50 to 75 million, and then do some equity thing on the side as well. Again, this quarter, one last little band-aid there, and then pay down some debt doing that. Because going forward, we're not going to. Here's the thing. From this point on with AMC, I don't see us going to the same route we had to go before. We need to do these giant equity raises. We need to do this capital. That's the only way to pay down debt, because we're not profitable. AMC by next year is going to be very profitable. 2025, every single person in the industry says that it's in a, we're going to look at the movies here in a second. 2025, 2026, they just got even better news. 2026, I know people are like, holy crap, we have to wait till 2026. No, I'm just showing you that it only goes better and better and better and better from here on out. Now, this at the end of this quarter, I expect us to, people are asking me, I expect us to end about 1.6, 1.722, right around this area. Now we're going to have cash burn then. Once again, it's going to be over 100 million cash burn. Now, what I want to do is raise about 50 to 75 million. And if he does that, I don't want everyone to go crazy. That's not a bad idea. Now, what that's going to do is, again, I expect maybe 150 million cash burn this quarter. He's warned you about the strike had its effects. After this quarter, the strike's officially gone. The content just goes better and better and better. And one of the things that I want people to understand also before we get into these movies is you're constantly seeing this. You're going to have more and more content come out. A lot of these movie industries, they got hurt by the strike as well. That's why you're seeing a lot of these movies move forward, then trying to get more and more out quicker. Now, one of the things we just got today, you now have a Super Mario Brothers. Yeah, it's 2026. People are like, holy crap, that's a long time. I don't think we're going to be in this play at 2026. But the fact that you can see that the movie industry, the box office, this play long now, the short thesis at this point is dead. The short thesis, that's what I'm saying. If we do one more capital raise, because here's the way I'm looking at it. We're going to burn about 150 million, maybe 160, 170. I don't know. It depends on how we're doing with everything else on the side. Because again, this quarter, the box office wasn't going to be there. But if we take a 75 million cash burn by selling, 50 to 75 million, by raising that capital, if we go ahead and do that equity, paying down debt, we only need to pay down 30, 40 million. Now, I know all of these people are going, oh, God, he's just helping the shorts and doing this. You guys, every time you've said that, you look over at, and it's Ortex. So here's the thing. They're lying. It's way higher. But every time we say that, the Ortex data goes up. Again, AMC's short interest, according to their data, which I don't care. I don't ever bring it up because it's always wrong. But even their data, according to it now, even after all the raises, it's the highest it's been. Since the reverse split. Sorry, my daughter was driving me nuts here. Okay, so it just continuously goes up and up and up and up. And at this point, they've basically pinned it down. I don't see AMC going to this point where it's going any lower at 450. The only way they're going to bring this down is they're going to try and take the news on the next earnings call. And they're going to say, oh, man, AMC took a huge cash burn. But even the way I'm looking at it is the price nowadays, that has that priced in for Q1's burn. Because everybody knows from Q2, Q3, Q4, like I said, guys, it just gets better and better and better. In Q3 this year, I expect AMC to have a very profitable quarter. I'm going to go into the movies here real quick. But again, what I expect Adam Aron to do in the short term is one more quick capital raise, 75, 50 million shares. Not a big deal. Apes will buy that up within an hour. It's not a big deal. You don't have to go crazy. You don't have to say Adam Aron's trying to kill it. No, what Adam Aron's doing is even... A lot of people went crazy today because I don't know if you guys know that cancel clothing guy. His name's Ian. He makes a lot of videos on TikTok, and a lot of people are going crazy because he didn't do research on Adam Aron. And you guys, I'm gonna say this, and I've said this forever. It wasn't, you just work for Adam Aron, you're paying for him. No, we were burning money for years, and no one cared. Tony DeNaro, myself, certain YouTubers said it forever. We have to fix our balance sheet. The reason that they got shorted in the first place is the balance sheet is awful. We're burning money, and all everybody did was say, no, he has to figure something out. Who cares? Blah, blah, blah. We're not selling shares. Well, if you're not going to sell shares and you're not going to make revenue enough revenue to, enough profits to pay down your debt and to put more in the bank, what are you going to do? You're just going to burn your reserves away. Adam Aron needed APE. When he didn't raise enough the first time, he ended up needing APE. I don't care what happened pre-APE. At that moment, APE was needed. We either needed to sell more shares or we needed APE for an ability for him to raise capital. We needed the reverse split after because he sold billions of shares. And now when you look at it, if you're a new investor and you're looking over at AMC, AMC to me would now be, even long term, hey, it's at its all-time low. The float's not even that big anymore. AMC now has the ability to raise capital. The box office is coming back. It's an attractive stock again. This wouldn't have happened if he didn't take the course that he took before. Now, could he have raised more? Could he have sold shares more at the top? Well, here's the thing. Here's my problem with people that say that. These are the same people that say, anytime we run, he sells and fucks us. You just told him, well, he needs to start selling at the top. So you don't want him to sell when it's running, because that apparently screws your squeeze. That's what apparently stops it. And you don't want him to sell lower, and you want him to hold. Like I said, these people are insanity. To blame Adam Aaron for everything is ridiculous. Now, here's one of the things I want to show people. Everybody was on that GNS guy's jock. I have never in my life seen social media, a group, a trend, whatever you want to call it, of people jumping on a guy's jock strap so hard, all because he says he's going after the shorts. So what happens? Retail piles in on this guy. Well, this guy's going to fuck him up. He's going to go after the shorts. He says everything I want him to do. And this guy, I'm fighting him tooth and nail. We're going to do this. We're going to do that. GNS today is trading at 33 cents because it's a shit business model. It was run by a shit CEO. And all he had to do was just say, I'm going to do this. Well, if all it took for all those people, if Adam Aaron would just start saying he's going to fuck the shorts up and talk about the manipulation like, well, the GNS guy did, and it did nothing for him. That's not going to stop the corruption. It's not that easy. Adam's Aaron's, and here's the thing about Mark Cahodes, why he's a big piece of shit. His quote, his specific quote he said, is that when a CEO is under attack, the best thing he can do is turn his company around, turn his revenue around. Just shut up, keep quiet, and turn the business around. Then Adam Aaron does that, and he calls him a piece of shit for doing so. Now, if you guys look at the box office going forward, there's no more of these massive cash burn quarters, period. It's just not coming. Everything that, like I said, the final, aftermath of the strike, all that, it's over. All the content's finally coming. You're going to finally start to see profitability, and that's what we've needed forever. We're going to start being profitable, and the banks are dying. So their creditors are now dying. So this play, when you talk about the MOAS, the squeeze play, their creditors are they're dying. They're crashing off. And AMC is only getting better. We're going to start being profitable. The box office is going to start coming back. 2025 looks amazing. 2026 looks even better. 2026, you have 2 Star Wars movies and a Super Mario Brothers just off the bat. You have a Toy Story movie. You have a new Avengers movie. You have a ton of big movies already planned for 2026. 2024, though, let's get to the rest of this year real quick. Where am I? March. So here's the thing. What is going on with my computer here? All right, so we're at March here. So in the end of March here, like I said, I expect us to finish around 1.68, 1.722, around there, around where we had finished last year. Now, if you look at the rest of the movies this month, Kung Fu Panda, I told you guys, Kung Fu Panda is going to kill it. Don't sleep on those kids movies, man. Those kids movies are huge. They can be bigger they can be insanely profitable. And one of the things about kids movies is they're the ones who want all the toys, the merchandise. AMC said they're going to start opening up more merchandise. That's a huge thing for us. So, sorry, one second here. Let's get into the rest of this month. So you got Ghostbusters coming out. Again, you have more of these re-releases. You're going to see more of these Pixar, more of these. You're going to see a lot more re-releases. They're really doing releases on Star Wars, a couple other things here. But you also have Godzilla coming up. Now, this doesn't show every single movie coming out. It's just showing the big names. It's not super updated. There's more content coming out, like I showed you guys with Spider-Man. So this list is missing some things. But then after that, so like I said, so that's how I feel. The end of this quarter, you're going to have Godzilla. So we have a good, strong quarter. So I still expect the end of this quarter to get about 1.6, 1.7. Now, next quarter is when it starts getting good. So I will say April is not the strongest month. You got Civil War. I think Civil War here is going to kill it. I really do. You have a lot of tension going on. A lot of people are going to relate to this movie. There's a lot of hype on this thing. It looks pretty badass. So I'm kind of interested to go see this movie. But the rest of April, there's not that strong. It's pretty much our February. But the thing is the rest of the quarter is good enough to make up for that. So when you start in May here, you got The Fall Guy. The Fall Guy, look, I think this is going to kill it. I think this movie looks super funny. So from May on out here, guys, you will see nothing but good news. Good news for AMC. From May on out, you are going to see AMC stock go up. They're not going to be able to contain it because, like I said, from this point on, there's no more bad quarters. You're going to have nothing but great news across the board because the box office it's starting to finally come back to where you're going to see those 2.5, those 2.4 billion quarters. But on top of that, we're going to keep selling more and more. Like I said, you're going to see profitability in Q3, Q4, Q2. We're looking, like I said, I think we're still looking pretty good here. But here we go. So you got The Fall Guy. You got the Star Wars re-release, Kingdom of the Planet of the Apes. This If movie, it's supposed to kill it. Like I said, don't sleep on these children movies. They can be billion-dollar movies. You also have The Strangers. You have a Forza, a Frozen Max saga. I think this is going to kill it as well. And one of the things that I think is going to be the biggest one here is going to be the Garfield movie. You reach every single audience. You can reach kids, adults, middle-aged. Everybody knows and relates to Garfield. I think this is going to be a massive, massive movie. On top of that, you're also going to get Bad Boys 4, Pixar's Inside and Out 2. I mean, these Pixar movies are out. They always kill it. They always do a couple $100 million. And then you're also going to get A Quiet Place Day 1. So like I said, you're starting to see the box office come back. So Q2, to me, this should easily be a $2 billion plus quarter at the box office, easily. Then you come down here after that, and it gets even better. So July, like I said, from here on out, this list isn't 100% updated. So there's a lot more content. It's just showing you the tops. So right here, just in July. So listen to July. You got this Despicable Me 4. Now, the last Despicable Me did over $1 billion. The one before that did over $900 million. So you have to assume that this is going to be another $1 billion to $900 million movie. And that's just to start it off, right off the bat. So Q3, you already have $1 billion movie, boom. And that's for kids. Well, the next thing you got is an adult movie. Twister. I think Twister could do really big numbers at the box office. I know my wife loves that movie. We're going to definitely be seeing that one. And then directly after that, you have Deadpool vs. Wolverine. Now, I feel like this is my most highly anticipated movie of the year. Maybe not for everybody, but I'm super jacked for this movie. I think this movie is going to absolutely destroy it in the box office. Again, this doesn't count all. There's a lot more. It's not like there's 9 total films coming out in July. There's a lot more, releases. Then you look down here in August, you got Borderlands coming. You got an Aliens movie coming. September for that month, you also have Beetlejuice, Transformers, a Saw movie. So you have a ton of really big name movies. And like I said, we're missing a whole bunch of other movies that will be filling in. And on top of that, you have Joker going on. So like I said, Venom number 3. I think this Venom movie I love those Venom movies. You got Gladiator 2. It continuously gets better and better and better. 2025. You have a Batman. You have a Fantastic Four. You have a Superman. You have an Avatar. This right here, this Thunderbolts, is a Marvel movie. This is their next big Marvel movie. You have a Mission Impossible. You have Blade. You have a Star Wars movie. Constantine 2. This is going to be with Keanu Reeves. Keanu Reeves always kills it. You have John Wick 5 coming out as well. You have Fast X. Another Star Wars. Oh, here's John Wick right there. A SpongeBob movie. SpongeBob with kids. They love that. He will destroy it. The Smurfs musical, I don't know if that's going to be... I mean, they have it up pretty high there, but I don't know. We'll see. I don't really go crazy on musicals. But then you also have a Minecraft, The Ghost of Tsunami, Dodgeball 2, Dodgeball. Everybody loves Dodgeball. That movie, Dodgeball 2, should be awesome. You also have in 2025 the Roblox movie. AMC is going to be the distributor on that Roblox movie. So again, 2025, it just gets better and better and better and better. So like I said, they brought AMC down to an all-time low. They tried to shake everybody out because right now at this point, it just gets better and better and better and better for AMC. And here's the thing. 2026 will get better because right now it just has all those big names that I told you, but they already took those losses. So they're going to tell people we need more movies. 2025 will have more content coming out as well. But you already saw all those. There's an Aladdin 2 coming out. I don't know how good. I mean, a Disney movie. It's a Disney movie. Aladdin 2 should destroy it. I mean, Disney always does well. You got a Mad Max movie. You got a Passion of the Christ movie. You have a Snow White movie coming out. Sherlock Holmes. I mean, you got a lot of good movies coming. So, yeah, I don't know how... I'm sorry, I was looking at the chat. I don't know how good singing movies is going to be doing here. But like I said, guys, content at this point, we were at like the worst. Because, again, February was the worst I've ever seen. They knew that Q4 last quarter and Q1 this quarter, we were going to have cash burn. And they could use that as an excuse. And they dropped it. But here's the thing. They can't really drop it past 450. I feel like it's pretty much found its bottom. Again, short interest is rising, rising, rising. And now for the rest of the year, you have nothing but better and better and better with content coming out. You also have a Lion King movie coming out. You have a Lord of the Rings movie coming out, a Karate Kid movie coming out, another Sonic movie coming out. So, I mean, you have a lot better, a lot better. Now, again, if Adam Aaron comes out with more distribution, amazing news. Another thing I expect Adam Aaron to say is they're coming out with more brands of candy. I expect them to say that they're pushing the candy out into stores as well. I expect another Walmart deal here by the end of the year, because I mean, it went so well with Walmart the first time. I can see Adam Aaron saying, we went with Walmart to make sure, because you don't just do mass push-offs like everybody wants them to do, but to go straight into Walmart again, that will be big things for, like I said, by the end of 2025. I expect us to have our alcohol. So I expect more revenue streams coming on top of better content. So, like I said, guys, nothing but better things coming. All these industries, all these distributors, they all need money. They all need more content. They're going to keep pushing out stuff. They're going to push out re-releases. They're going to move things forward. So, like I said, guys, it's only going to get better from here on out, from this next quarter. But expect one more cash burn, because if he does that, it's about $75 million. He does the private offering. You will still have over $800 million in cash. You will have paid down debt in each quarter where you had cash burn. And then from there, you should start seeing profitability. So, like I said, for AMC, to me at this point, it just gets better and better and better. So for the play, I feel like the play right now is actually in our favor. I know a lot of people don't feel that way because they just look at the stock price and go, there's nothing else that contributes to it. But here's the thing. Tomorrow, if 5-10 of these guys got liquidated, do you think they give a shit if it was $4.50 or if it was at $5, $6? No. It just takes the dominoes to fall. It takes the credit to dry up. It takes the banks to start going down. It takes the people that are giving these guys these loans, these bailouts, for them to start having their own problems. Well, if you don't think that it's getting close, when in the hell have you ever seen hedge funds bail out a bank? We had hedge funds bail out a bank. We were talking about New York Bancorp. It was just plummeting. It was plummeting. I was live for a little bit there, and then I was talking about how they're going to go into an equity sale. They're going to sell off all of this stuff, and in comes this Munchkin guy. I didn't look at him real quick, and then I had to get off because I was in the last couple seconds here. Well, turns out it's Trump's treasury, so it's basically a guy with government ties, And then he went ahead and he got his buddies in hedge funds, and he went ahead and called up Kenny Boy. So Citadel was involved in this deal as well, and you have to sit there and wonder why everybody... This is why Kenny loves it, because they always come to him for bailouts. And here's what's funny, is these guys got this for $2 a share. The bank was so desperate, they took $2 a share. They raised $1 billion. Now, this is up to everybody. Why do you think people are going to stay in this bank? Why do they think that this $1 billion was good? So what they're going to do is Kenny's going to manipulate the stock price for a while, because that's what they do. Is, as Ken said, we're going to put it to where we think now, because Kenny has his hands in this. So Kenny goes ahead, he dips his hands in there for a bank bailout, because once again, you have to ask this question. Why didn't the Fed step in? Why did the Feds not step in and save this bank? Why did it have to be hedge funds? And why did the hedge funds come in and step in and save this bank? Was it just for profit? Was it to gain access into banks? Into things in areas they couldn't have? Was it because the FDIC's already fucked? And they couldn't afford because the FDIC's already having problems. Banks are already having problems and lost profits because what? They had to go ahead and replenish the FDIC after just a couple banks went down. So, when you have Ken Griffin and you have hedge funds bailing out banks, does that not seem like a last resort to you guys? Because again, if the government was going to come in and step in and start helping people, they would have helped them. They would have saved them. They would have made them not need to do this mass sell-off. So you have to go ahead, and this story here is pretty interesting. You have to ask yourself a lot of questions, and it'll be interesting to see here, because again, $1 billion, this bank is in such... I've shown you guys their financial situation, their statements. We went over all of their stuff. They're not... $1 billion isn't going to save this company. It's not going to save this bank. They have way too many problems. So basically, why did they all get abandoned into this bank? Like I said, I'm very interested to see this story, especially the second I found out Ken Griffin got involved with this as well. Now, here's the thing. They put in a $1 billion total. It showed the breakdown of all of them. There was only $100 billion left over between Ken Griffin and a certain amount of people. So I'm thinking he only put in like $35 million. But we know what that ends up doing, because we even saw what that does for Twitter. So I want you guys to read this. They put in a whole bunch of warrants. They made sure that they got a great deal. They raped the bank, of course. Good job. Evan, thank you. Baby Bigums appreciates the diaper funds. I just saw that. Thank you, my friend. But here's like I said, they're running to hedge funds. So now you have banks giving hedge funds loans to bail out other banks. I mean, if that doesn't tell you they're in dire stress, I don't know what does, guys. You have banks giving loans to hedge funds to bail out other banks. Because we already showed you they're losing billions and billions and billions last year. And at the start of this year, they're already losing billions again. So where are they getting this money at? They're borrowing it. And then they're giving it to other failing banks because they want certain banks to survive. Well, here's the thing. Powell comes out and he says there will be bank failures this year. And I was like, you guys, they're not stopping it. They're not stopping it this year. By May, and here's the thing, and this is why I keep saying with AMC and people asking about that play. In May, it should start being really good for us, because in May, you're going to start to see, I believe, bank failures, credit drying up. They're not going to be able to hold it down as much. It's still going to be a low price to where all of a sudden you're going to still have a ton of buy orders going through. The company, the fundamentals are going to get better. Eventually, that you're going to keep seeing the short interest rates. Like I said, you're going to eventually have some FOMO maybe kicking back in. I'm feeling very good for us going forward, because I'm going to show you that everything I've been saying is 100% correct. And you're seeing banks run to their last resorts. And this is not good for banks. Where they're running to is not good. And when they've ran there in the past, and I'm going to show you past history, when they've ran to this area in the past, there's been a crash every time. You cannot go and get these high interest rated loans for these banks. They can't afford it. And there's a lot of other things that people aren't looking at. So before we keep going here, but like I said, we're going to get into Powell here for a second. Listen to this guy for a second.
Large banks. It's more, smaller and medium-sized banks that have these issues. Sure, there will be bank failures, but this is not the big banks. If you look at the very big banks, it's not a first-order issue for any of the very large banks. It's more, smaller and medium-sized banks that have these issues. We're working with them. We're getting through it. I think it's manageable is the word I would use, but it's a very active thing for us and the other regulators, and it will be for some time.
Now, the funniest thing about that quote he says is, we think it will be what I want to call manageable. You think it will be called what I call manageable. No, it won't. It's not going to be at all. And when he starts to admit that there's going to be failures, you guys should start listening at that point. There's going to be failures. We've been calling it, like I said, last 9 months. There's no way they get through 2024. There's no way. Everything, the way the system's going, it cannot get through 2024. There's no possible way. So when you go, like I said, he's talking about bank failure. So what's happening now is the FDIC has added 8 banks to its problem list, and those 8 banks total $66.3 billion in assets. Well, like I said, the year just started, and they just suddenly slapped on 8 of them. There's going to be more and more and more. And what happens when the FDIC can't cover, guys? Well, the big banks are going to start taking massive blows. They're going to have to keep refunding, filling up the FDIC here. That's what they're going to have to do. Well, so it's going to actually start to hurt the big banks as well. So Powell's not correct here at all. So what they're trying to do is, I already told you about the new regulations, the endgame regulations. Now, the endgame regulations currently as constructed will be the end of banks. There will be 0 banks left, that may be like 10. There's going to be very, very, very few banks left. So, of course, they're going to need to revise it. So they went from 30% down to 16%. Because they know that these bigger banks are all so leveraged, or so tight, or just what they're reporting, not counting derivatives, all the stuff they hide, they can't afford it. They know that more and more people are leaving, and they know that the government at this point, once again, has to have everybody buy treasury bonds, because what? Other countries are not buying it. Somebody's got to. So this is Powell's plan here. Which it's like, okay. What they're going to do is, I told everybody, you're going to be forced to use the discount window. Well, the discount window, you have to have certain standards. You have to be held. You have to have a certain asset that you have to make requirements to get into it. You can't just, I'm a fucked bank. Here, come bail me out. They're not going to do it. So you actually have, you have to actually be pretty much right on the brink. Well, I showed you guys last time. You're now starting to see the Federal Reserve window being giantly tapped into. In February 21, 2024, again, there was nothing. 178 million. Then it jumped up in 1 week to 2.2 billion. When we keep getting this data, this will jump and jump and jump. I expect the Federal Reserve discount window to jump to about 60 to 75 billion. Now, back to this. So, I'll get into why I went into that in a second here. So, what they're trying to do now is, not only are they trying to change the rules for the big banks, they now want to change the rules for smaller banks as well. And what their requirement, it was going to raise up to 5 They want to lower it down to about 3.5, you know, just enough to keep a couple more on, you know, the bigger ones that they need on the threshold. So once again, the end game rules that I was talking about, this is why this country sucks now, is what should have been written into a law, which could have stopped crime, has now been watered down, gray areaed and loopholed. But here's the thing. It's still going to put a giant, massive handcuff on these guys. Now, I want to show you something here quick. These guys always ask for exemptions because they cannot afford anything. They can't afford a dollar raise. They can't afford a 1% raise. They can't afford anything. I want you to look at this screen. If you have the ability, I know there's people that will just listen in the background. If you have 1 second to turn at your screen, look at your screen really quick. You see all those boxes? Since June 2020, everything has been so bad in the derivatives market and the options chain. These are all the new exemptions that they needed. Without all, this is how bad it is, you guys. Without this many exemptions in 3 years, they're all still active. They're all still going. Without these exemptions, they would have went under. So everybody that said, man, you said this was going to take them under. Yeah, but I didn't know they had a new exemption in the background. I can't know every exemption every minute of every second. But when you suddenly add 30 different exemptions together, yeah, when I tell you rules say this, so that means this should happen, and then I didn't know there was 27 exemptions behind it. My bad. But as you guys can see, this is what regulators do. This is what they do. They're there for a illusion that there's law and order, but when there's chaos, they write exemptions. Now, why do I bring this up as well? Well, as we went over last time, a couple years ago, we talked about the treasuries. Well, I've explained to you how the government spending's destroying the treasuries, the market's getting out of control. These guys were, shorting down below. All of a sudden it went up. All this stuff went crazy. Interest rates went nuts. The debt went ballistic. Well, if these guys have to report any of their exposure to treasury on balance sheets, people are going to start going under as well next year. So now they're asking for a permanent exclusion on balance sheet U.S. treasuries from total leverage exposure. This is consistent with the scope of the temporary exclusion for the U.S. treasuries that aligned that was in 2020, which is right over here. What a fucking joke. So now what they're trying to do is, because these were supposed to be temporary, they're trying to start to get these things permanent. So, yes, Billy, actually, I feel like at this point, Billy's gotten his surgery. He needed a couple organs. He got a couple transplants at this point. He's feeling good. He's got a blood transfusion. He has, some rehab. Come May, Billy's going to start to be able to walk again. Billy's going to start having good articles about him and his progress. Billy's going to start turning some profits here. Billy's going to have a really good Q3 and a good Q4. And next year, they're saying by Q1, Billy could be walking again with some crutches. By 2026, Billy's fully operational. And that's just as we is. Like I said, he's going to add more revenue. He's going to cut more this. He's going to cut more of that. There's going to be more movie releases. You're going to get distribution deals. I don't know, but there's a ton of stuff that is going to happen before that. But just the fact that he said we no longer need to get to pre-pandemic levels to get to profitability, the fact that we can end up getting, I believe, once he starts getting suites in there, you get into the stores, you could easily end up getting 250 million between the two. That's a lot of income going forward. And again, if you add some more type of candy, you can go up to Hershey's, renegotiate your shelf deal and say, hey, we don't have that much space. We have more candy coming out. you're going to have to give us better rates on your candy that we're selling. Boom, even more profits. If he can keep going to more of these landlords, because commercial real estate is getting so bad, and that's one of the things he's talking about on how he's reducing cash burns, is he's going around renegotiating rent. If he can do that in all of these, that's massive. Now, back to this. So, right now what you're having is them saying, all right, we want to save certain amount of these people. The ones that we aren't going to save. Now, let me show you something. So, again, you have the federal window now being accessed, okay? It's now being tapped into by the billions. I told you this is where they're going to start to run to, but this has limited access. So, what's going to happen? Monday's going to come, okay? Monday's going to come, and there's going to be people that say the crash will happen. It's not going to happen Monday. They're no longer going to have access to that easy capital, okay? So where are they going to go? They're going to be able to hold out for a little longer. But where are they going to go? They're going to go to a place they don't want to go to. Boom. They're going to go to secondary credit facilities at higher rates, 50 base points higher. They're going to start paying top-notch dollars to survive another day. Now, if you guys notice, on most of these crashes, what happens? What happens before all these crashes? Oh. Boop, crash. Boop, crash. Crash, 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 crash. Oh, they're all lending from here. And then they can't afford to pay back their really bad loans. Sound familiar? Well, what just happened? If you guys notice, they don't access this. This isn't something, look at 2012, 14, 16, 18, 20, 22. Nobody accessed it. They didn't need to. What just finally happened the other day? Look at, what are we looking at? They're accessing this facility. They're going to second credit facilities as a lifeline, as a life preserve. But the problem is the life preserver already has a hole in it. Every time you see a crash, it goes from zero to jumping. Well, look we jumped up pretty good. On Wednesday, we jumped up pretty good. Well, guys, they still have access to the other facility. So this is going to jump up at a higher pace, and you're going to see this, like you saw right before 2008. You're going to see a giant spike because the situation's worse. You're going to be seeing these type of spikes like you saw in 2010. And now they're going to have credit card loans at 30%. They're going to be living on the edge like us. So now, like I said, look at this chart. It's happens every time before a crash. Literally, look at those blimps. It's every time. It's because they have nowhere else to turn to. So they go, let's go to those 30% credit cards. Again, look at that blip. It's pretty fucking big. For the facility not even ending yet. The facility's not ended yet. So what you're seeing is exactly what I'm telling you, and it's exactly what Powell is saying. You have people accessing the Federal Reserve window. Like I told you, it'll jump up to 50 to 60 to 70 to 80 million right away, okay? Those are the people they want to save. That in his eyes is the manageable event. When he says what we call manageable, that means he's saying, I'm going to save the ones I want to save. We're going to allow them to access this window. People that don't qualify are going to have to access this window. They're going to have to access the 30% credit card window, and when they can't access any more capital, when that's come knocking down, when their commercial real estate sell for a bigger loss than what they thought, these ones will crash. So you're not going to see the crash right away on Monday, maybe a week after that, 2 weeks after that, but you're going to see it. It might take another month, but you're going to start seeing these guys go down hard. They're not going to afford this. They're not going to be able to pay these 30% interest rates. Now, one of the other things that people aren't talking about is if you look over here as well. The discount window is always a bad sign. Whenever it jumps up, whenever it skyrockets, what happens? Look at crash, crash, crash. So, here we go. Again, well, and a lot of these people right in the meme area, like I said, this is, they're going to blame COVID on a lot of this stuff over on this last part, but no. Well, here's the thing. 80 billion was taken out ending March 11th. That 80 billion is going to be due. They're going to have to pay that back before they can re-access the new window. So what happens if they can't pay that back? Do you guys see what I'm saying? It's continuously, well, we pushed the can over here. We pushed the can over there. We took a credit card out to pay this card. But the problem is you're now up to $80 billion coming due. You're also now up to $929 billion in commercial real estate coming due. You don't have $1 trillion bailout sitting by. You have a lot of people that don't understand. They sit there and have this illusion. The feds can print unlimited and forever and just do this and that. And no, in theory, yes. But in reality, no. Because when they sit there and they print and print and print and print and nothing's getting solved, and the economy's getting worse and worse and worse and worse for everybody, inflation's jumping. Eventually, you're going to get to a point where it's so unlivable, you're going to piss off all of your people, and eventually you'll have a civil war. There is an amount that you will get to that will piss off enough people. So in theory, yes, you can print, but in reality, no, you can't. You cannot print and keep it quiet forever. You have too many effects now when you print. On top of that, what do we show you? The Federal Reserve is operating at 160 billion loss. They're not trying to print it. When are they ever going to get this back? They can't even get inflation under control now. They already said they can't raise rates, or lower rates. They already talked about raising them potentially. And then in this last meeting, they said the same thing they said before. They said they were going to raise them. We think it's getting close, and we just need to see more data. You said that last time. And then a week later said, well, we might have to raise them, actually. Yeah, we know. Because the more data comes in, the more shows you how fucked up the economy is. And the more you print, the more fucked up the economy is going to get. The problem is the GDP to debt ratio that is, it doesn't equal out. It's off balance. It's not there. You're living off debt, and it's debt that you can't afford, and it's unsustainable. Powell has said it himself, and you're now going to see the repercussions because, again, there's nowhere left for these guys to run. And this is what I wanted to see. I wanted them all in the stock market to run to make a Meg 7. Everybody run to the same hill. I want that hill to burn to the fucking ground, because what's going to happen is you're going to start to have all of these people that have NVIDIA. They have NVIDIA to back up their fucking, for hedging and NVIDIA. Well, guess what? What's going to end up happening? What's going to happen when suddenly 10, 20, 30 people with NVIDIA, suddenly they all got liquidated? Oh. And now what happens when suddenly NVIDIA just stock plummets because enough retail got in where they can take a ton of fucking liquidity from it? And now you have a ton of other people in problems because that hill is burning, and everybody's going to start running. So you wanted them, if you want them OS, you want them all stuck and betting on the same play, because the more people on their side that pile up on the play, when the play collapses, you get your MOAS. So, one of the things I also talked about for the last 3 years, so I said, one of the things you're going to see for the Black Swan event is an unknown, unnamed United States type family office is going to go under. Well, this just came out the other day. Family offices have tripled since 2019. creating a new gold rush on Wall Street. Regulations, there's more regulation coming and more regulation coming in the United States. So what are they doing? They're now going into family offices. They're going into family offices. They're taking their misdeeds to unregulation. This unregulated sector, I want you guys to understand something. They talk about hedge funds and hedge funds and hedge funds. All the hedge funds in the world asset equals about 3.6 trillion. Okay? 3.6 trillion. Unregulated hedge funds called family offices manage 6 trillion or more. They double the amount of hedge funds, and they're unregulated. So now everybody's running over there. Everybody's sending over their risk to their family office. Everybody's doing trades with their family offices. A lot of people wonder where they're hiding their short interest family offices. It's very simple. If I don't want a regulator, think about it. Why do they operate in dark pools? Why do they operate in internalizers? Because they don't want anybody to see. What are they doing over here? They're taking their garbage and then they're transferring it over to this shit. Steve Cohen, he was one of the guys I thought was going to go down, but unfortunately his family office is still thriving. So this is insane because if you come down and look, I want you guys to see this. Number of worldwide family offices, okay? The number of worldwide family offices, the most number one, obviously, in the world is the United States. But if you guys look here, I want you guys to look at the numbers just growing by the thousands. 2019. So since 2019, there was 1,285 family offices in 2019. There's now 4,600. You went from 1,200 to 4,600 in 4 years. You went from 1,200 to 4,600 unregistered. There are more than, listen to that, there are more than 2,600 billionaires in the world that now manage more than 6 trillion in family offices. So there's 2,600 billionaires running around gambling unregulated, playing with, doing Bill Huang stuff, buying stuff, shares, whatever, doing whatever they need to do to manipulate. There's 2,600 billionaires that play by their own rules here in the family office industry here. 6 trillion. That is insanity. This is where a lot of your crime goes. Like I said, this is where a lot of the back end bullshit fraud goes. Right here. There's called risk transfer. Well, who do you think is going to buy it? Well, I could just risk transfer it over to this family fucking office. Joke. But we know where they're running. Again, we know where they're running to the discount window. But again, this all is, it's a temporary band-aid. But this here, your secondary line of credit facility, this is your biggest indicator they're running out of time. Now, I just want to show people this quick because this is insanity. Banks have committed 7,660 felonies. They have paid $386,109,000 in fines. I mean, think about that, you guys. They have done 7,660 felonies. They've paid almost $400 billion in fines. All of those were acceptance, waiver, and consent. None of them ended in jail. Well, maybe a couple. Less than 100 of those ended in jail, easily. and they're all still operating. If you look over here, Bank of America is still our number one. We like to keep track of our bank trackers. So Bank of America is still number one with 328 felonies. They have paid almost $90 billion in fines. JP Morgan Chase, I showed you guys a year ago. They were at 243, then up to 266, now up to 275. So they're doing about, what, 38, 25, 20 a year. No big deal. So they will be catching up to Bank of America within the next 3 years. JP Morgan Chase will be your number oneers. But like I said, I mean, if you got these guys sitting here paying 266 felonies, 275 felonies, 328 felonies, these are all tax write-offs. So they didn't pay 80% of that. They said in most cases was a tax write-off. 80%. So out of this $400 billion they paid in fines, 80% of that we paid for them in tax write-offs. So we only paid, what, $300 billion of their fines for their illegal things, why none of them went to prison? Things that make you go, Well, like I said, at this point, you're now seeing Powell's going to show these guys he's going to have to pick. I told you guys one day he's going to have to make a choice. You're going to have to save the banks, or you're going to have to pick inflation. It's at that point he has to pick inflation. You will now see medium to regional banks dying in a month and a half to 2 months. And even he said the United States has more banks to capital than anyone in the entire world. So reducing some of these banks in his eyes is not a big deal. It brings more power, more concentration to other banks, and he loves it. Meanwhile, the debt has now went up to 34.461 trillion. Next week, you will be at $34.5 trillion. We're spending again $100 billion every now 2 days, 2.5 days. You're now spending over 3.3 trillion a year. And at the same time, what's happening? Government debt is now bigger than the entire United States economy. 2012, debt surpassed GDP for the first time ever. But look at this. Look at this chart. See, you can see it going up, raising, but now look at this point. For a while there, we were able to hold it close. But now it's completely separating. It's breaking off. It's raising a lot faster. Look at this last spike compared to this. Like I told you guys last stream before that, the government's like, oh, we raised $382 million in GDP. But the problem was it costed $986 billion to do that in debt. So your debt, you're paying 3 times your debt for your growth. If growth costs you 3 times your debt to make, I know you guys aren't in business 101, but you can't do it. It doesn't work that way. And this is why they want CBDCs. This is why they're running. Everybody, where are they going? Why is Bitcoin flying? This is why they're getting away from the dollar. This is why they're buying Bitcoin. They all know it. They all see it. They all know when the shit crashes. Whatever the new asset is, whatever they can do to get in, they're going to go ahead and they have all their shit safe over here for now. And that's why I don't see Bitcoin dropping for quite a while. In the past year, the United States has created 921,000 part-time jobs, and they lost 300,000 full-time jobs. And this is what I was telling you. Everybody's firing or companies are going under. And now everybody's working at fast foods and everybody's working 2 jobs to make what they made before. You're not getting new corporations. You're going to get less and less taxes. You're getting less in taxes. And this is why now every single person's like, we got to raise taxes on the billionaires. Yeah, because you have nowhere else to go. And eventually, they're going to go, we're paying you to not do this, so I'm not going to pay you anymore. And then they're going to go, well, then we're going to take this away. So you're going to keep paying me. And eventually you're going to have all these guys fighting each other. And like I told you, all of a sudden you're going to start having finger pointing. There's nowhere this can go for these guys. There's not. You have to let the MOAS happen. You have to stimulate your economy. And you need this stuff to happen. You're not going to do a stimulus package. And you already showed every time you do a stimulus package, we get poorer and they get richer. It doesn't help. It doesn't work that way. It's a 1 month fix for everybody. It's a, hey, I know you're 1 month behind on your rent. Here you go. But then the rich guys get what? $1 million, billions of dollars in fucking, for these corporations get billions of dollars, all this shit. And then guess what? They got richer. We got poorer because ours already left. That's why when people ask me, I always say, again, guys, be safe, be smart, get the fuck out of these banks. There's one thing here. There's one thing. Again, when the FDIC after says the FDIC isn't fully funded yet, you guys. It's not even fully funded from last time. And now they're like, these 8 banks are going to fuck. They're basically telling people these 8 banks are going to wipe us clean again. We're going to be wiped clean again. And Powell's over here like, yeah, we can't stop this now. We know. Hold on, where is the... Whatever, I'll just go on. 1 second here. Oh yeah, I didn't even show you guys yet too. On top of that, you got U.S. bank profits. Now here's one of the things. U.S. bank profits dropped 44% in Q4 as big firms cover failed bank costs. And that was hit to the Federal Deposit Insurance Corporation. While they needed everybody, they added to the fees. They said, hey, we don't have enough money. You guys need to put more money in. And now they're saying to everybody, hey, even though you guys took a big loss, we're in big trouble again. So again, guys, for these guys, it's not just one small thing. And that's what's funny about Paul. We want to call it manageable because we can stop this one part. But the problem is it's a 7-part train. But 1 second here. I was actually pulling something up here. One second. Oh, yeah. PS5 owners lose access to hundreds of digital games wiped instantly from their account. Will this happen to your bank account one day? Yes, it will. Yes, it will. And then what they'll do, there was people, I've seen stories with this, where they've gotten their accounts closed down. Guys, this will happen. Get the fuck out of a bank. If you can get, like I said, they want everybody to go into money market funds. That's why they're making them so attractive. And I told everybody, the way that they're going to get it, the way that their end game goes, is they get all of us buying money market funds. Because that's the only way at this point to stay afloat, other than, Bitcoin, gold, things like that. Their way of saying is, go over here, that's where we want you. And then when too many people get into the money market funds, that's when the United States will default. It will default on its debt when all of its U.S. citizens hold it and not other countries. Because they don't give a shit if they piss you guys off. They don't care. But they do give a fuck if they piss off China enough to start a war. So their end game is we'll just wipe them all clean, wipe ourselves from the debt, and start over at worst case scenario. So I tell everybody, people wonder why Bitcoin, I said Ethereum. Here's the thing. When I told people to jump into Coinbase, the first thing I said, I didn't say jump into Coinbase. I just said I'm going to play Coinbase, and a lot of people can't afford Bitcoin because when the ETF news was coming out, like who the hell had 30,000? Yeah, you could get some exposure into it, but I mean, Bitcoin was a way cheaper option and you could get a lot bigger exposure. So I said it's going to be the ETF to 8 of these Bitcoin ETFs, or the custodial. It's going to be this custodial to 8 of the Bitcoin ETFs. So whatever happens with Bitcoin, they're going to start taking off. It's a smarter play and a cheaper play. Boom. Next thing you notice, Coinbase is up $130 fucking a share. some people could have gotten real rich off that one. So there's a lot of places where you can push this, but just know people are going where they're running. You see gold at an all-time high. What are central banks doing? They're buying gold everywhere. They're buying gold at a record pace because they all know every single one of their economies are fucked. They're also over-leveraged and fucked, and everyone's gotten credit that they shouldn't have gotten. Too many people are defaulting. Too much crime's going on. The crime's not by $1,000. It's by the trillions. If you have trillions of dollars siphoned from your economy, there is consequences. Massive consequences that you cannot hide. So again, the Fed is at their point where they can't bail them out. The Feds have toxic assets from bailing them out in every single way. They have toxic mortgage-backed securities. They have toxic loans now that are tied to their federal lending program. They're losing $160 billion. You're operating at $160 billion loss, and it's going up every single week. The Fed are pretty much, they're in their point where they're tapping out. Again, people go, yeah, they can just print it all away. Yeah, you can print it all away and watch inflation jump back up to 5, 6, 7, 8%. And then what are you going to do? How do you explain that to your citizens? You have to remember the Federal Reserve's main job is to hide their crime from average people and keep it down just enough to where they can steal enough and get away with it. That is the point of the Federal Reserve. So, again, they can only print so much. There is a limit. Layoffs rise to the highest number for any February since 2009. But everything is fine. Again, they're laying everybody off. They're getting rid of full-time jobs. No one in the economy can open up new corporations. This is not sustainable. Your housing market is too unaffordable. Housing defaults have just hit the highest level in decades. You're up to the highest level since 2013. And it's skyrocketing. And it's going to get harder and harder and harder going into next year. They're propping it up because of the election as much as they can. But there's so many walls crumbling, I just don't know what they're going to be able to do. So again, guys, with AMC, if you're an AMC play, coming May, it gets nothing but better and better, and it nonstop better going forward. It does not slow down after May. For AMC, it's nothing but great news going forward after that point. Until May, just relax. Expect one more capital raise at about 50 to 75 million. Don't go crazy. It's not a big deal. I don't care if he sells it at $5 right now. It's called putting on a Band-Aid, dude. In the longer term, it's going to be better for you. You don't want to take that massive of a cash burn and just, you have a great reserve right now. You want to make sure when by the time, you're getting into profitability, you have tons in the reserve to where you can pay down your debt. You can still go and, hey, maybe we tap a little bit here and explore another revenue stream, and it's not going to destroy us. It's not going to overburden us. You can maybe buy theaters. There's other opportunities. Like I said, you want a lot of cash on hand while you're paying things down. So like I said, guys, nothing but good things here for AMC. Does anybody have any questions at all? If you guys have no questions, I'm going to get going here. I have something I got to get going to. Again, I'm going to try and get Peter on here. I mean, me and him just can never seem to get a day together. So I will try and get him on here as fast as I can, you guys. Hopefully trying to do it tomorrow. But thank you guys for listening. I have to go do something with the wifeys here quick. Again, thank you for the donation for the diapers. Appreciate it. And if you guys haven't donated to the Puppy Foundation, I went ahead and put up that Puppy Foundation. Thank you guys and have a good day.